It is my absolute pleasure today to welcome one of Cairns' leading real estate agents. He's the number one agent in Smithfield, selling over 50 properties in the past 12 months, while actively handling a number of renovations, building a duplex, and running a completely separate business. He's an active property investor and a completely top bloke. Welcome to the podcast, Ken Turner.
Hi mate, how are you? Thanks for having me.
Absolute pleasure to have you on.
Yep.
You sound like a busy man.
Yeah, mate. Yeah, the weeks definitely fill themselves up. That's for sure. So there's not really any time left at the end of the day. Yeah. So no, it goes quick when you're busy.
I feel like I struggle to fit everything in, and I was like, just having a quick scope of your life, and I was like, holy shit, this guy fits some things in.
Yeah, mate. Yeah, no, it's a lot. So between renos and selling other people's houses, running the tool company, that sort of stuff. It's it is a lot. So but it's rewarding. It's it's what we've built, and we're happy to have it. There was a lot of work to get here, so I do enjoy it as much as I work. I enjoy every minute of it. Yeah. So,
no, I love it.
Yeah.
Love it. Now, mate, I have to ask. I've heard a rumour that you own a whole street in Smithfield. Tell me the story. Put the rumours to rest. Tell me.
Yeah, well, mate, it actually started not quite a whole street. There's only a couple of houses on it, but they are in a row. Mate, we bought a deceased estate on the corner of a road in Smithfield, quite a sort of popular street in the area. It kind of just snowballed from there. We renovated it, we got it, and then one of the neighbours mentioned they were looking at also moving theirs on. The tenants sort of came over and said, hey, look, the owner's doing this. Ended up having a good chat, and sure enough, they also wanted to move it on, so we got that too. And then again, next one along, we spoke for 18 months, nearly every fortnight with him, and finally after 24 months, he sort of decided to move it on as well. So we secured all three, which is great. So
tell me about that. So you had the first one,
yep,
the second one. Mm-hmm. And then the third one took 18 months. What did that actually look like?
So, mate, it actually started. So we had the first couple, and this is the story where the blue fence comes into it. Is I was talking to the lady.
For anyone it's Stanton Road, isn't it?
Yeah.
Anyone that's ever driven down Stanton Road in Smithfield, you will get to three houses. I'm going to use the word. Maybe obnoxious. Maybe it's not. Maybe it's not obnoxious. Put it this way: my wife wouldn't paint our fence that colour. But the three fences are all blue.
Yeah, that's right. Correct. So I had a lady walking past. We'd painted the first fence, and she said, "Oh, I don't like that colour." And I was like, "Oh, wait till you see the next two houses down the same." And she said, "Oh, that's a bit eager. I don't think you'll be able to get that." And I said, "Okay, no, that's cool." So, kind of not out of spite or anything like that, just out of a bit of a laugh, I ended up getting the next two properties. I built the fence out the front, and then I sprayed all of them the same colour, so it's the great blue wall of Stanton Road. So,
that is so good.
Yeah, no, it was a bit interesting, but bit of a laugh, mate. Yeah, it was definitely worth it.
Very nice. So tell me, where did your investment journey start? How old were you? What inspired it?
Mate, look, I grew up, obviously, I owned a plumbing company. I saw a lot of people that were wealthy, and I saw a lot of people that had a lot of property that we worked for. Where I was actually first renting off a lady we did a development for, she owned all 20 houses in a row, and they're worth 1.1.
That's owning a street.
Yeah, well, that's right. And then she put another 20 on the front, and I thought, how do I get to this lady's level? Which obviously that's well in the future. Like there's no, that's going to be a long way off. But no, I just saw that, and I thought, wow, I'd love to own something or a property myself. And we moved to Cairns, and I've started there. Built our first house in Smithfield, and it just sort of snowballed from the first one. We saw a lack of land on the beaches. We saw, attractive building rates and property prices. We got one, and then it just went from there. Yeah.
How old were you for that first one?
I think I was 21 at the time when I bought my first property. So
and that was a new build?
Yep, new build. So we opted for a new build because I was already doing plumbing. I didn't have time to go home and be renovating every day and that sort of stuff. So we opted for a new build. It was quick capital growth. We saw what they were selling for, and we saw the land was running out. So as soon as that new build was finished, we pulled the equity and went straight into the second one.
What year was that?
So 2019 was the end of our first build.
Nice.
We moved in, I think, the day before Christmas, which was good.
Very nice.
And then from there, we went 2021 was the second. So,
nice.
Yeah, right before the boom. So,
perfect timing. And built that first one.
Yep.
Was there always a goal to keep going, or was it dip the toe in the water, or?
Look, I mean, at that point, I was sort of learning what equity was, what capital was. I didn't have really, like I'd watched a lot of videos from Nathan Birch and that sort of stuff, so I had a general idea, but I didn't know how it all worked 100%. So we're still sort of learning, and the goal was just to get a second one, really. And then from there, once we'd done that, it felt quite easy. We didn't realise you could borrow 100% of a property just by using money of your own house. You didn't have to put your own money in. So that's when it really took off. We started going from there. So, yeah.
It's funny, like, hearing that. It, like, brings me back to my first property purchase, and it, in hindsight, like, performed very bad. It barely grew over a 10-year period.
Yep.
But the lessons I learned, like, getting into that property, and, like, you know, you're saying, like, I didn't realise how easy it was. And that's so often the case, like, until you've actually, like, got into the game.
That's right.
And started to, you know, how does a conveyancer do their thing? How does the finance work? Hold on, what? We can borrow 100% of the property price. Like, all of that seems so distant, so foreign, and I think the sums of money is so big that it can be quite daunting. You know, if you're on 60, 70, 100 grand a year and you're looking at borrowing $1 million, it's like, how am I ever going to repay that? And I think a lot of people, like, relate it to, like, credit card debt. They go, well, I've got a $5 grand credit card and it's like the curse of my life. Why would I want to go into like $1 million worth of debt?
100%. The big difference is, though, is that with credit card debt, it's not making you anything, you know, like, whereas when you're going into property debt, you know, the property prices are going up, so you're getting something back for your investment. You're not getting nothing and just paying interest on it. So it's very different debt. But I think a lot of people, even people I speak to every day in real estate, that already own a property, and, you know, they're trying to pay it off to get a second property. And I'm thinking, I wonder if they know about this. So we speak to people quite often.
Is it a secret?
Yeah,
like, should we keeping this quiet?
So I often talk to people. I'm like, you know, you don't have to pay that property off to borrow and get a second one. You only need, you know, $150,000 of equity in that property to go for your next. So it doesn't sound like very common knowledge from what I hear every day. Yeah,
I think it's one of those things. Like, if you ask someone, they like, yeah, we understand it. But until you take that first step and you actually watch the pieces of the puzzle all start to come together, it's just so daunting. Like, it's the value of everything. It's like, seems like this complicated thing. But yeah, I think that's where, like, I'm of the same opinion. I'm always encouraging people, just like, get your foot in the door, go buy one.
Yeah,
it doesn't have to be like a $7 million house in Sydney.
Just something.
It
just has to be something. Bricks and mortar. Look, I mean, personally, I haven't got into units yet. I know they're very profitable for a lot of people, but I just stay with houses and, you know, areas I know, because I'm still nervous about branching out into areas I'm not 100% confident in. Like, I know a lot of people that are very, very wealthy from Airbnbs and all that sort of stuff, but personally, I haven't had any units in my portfolio yet. Duplexes we've just started, obviously, but yeah, I definitely try and buy stuff with. Now I aim for homes that are on more land, that are older, that I can either knock down for the future or renovate, that I know that land will hold value. So
I think that concept makes a lot of sense. Like, at the end of the day, the land really is what holds its value.
Correct.
The building's always going to be getting older, depreciating. At some point, that building is no longer going to exist.
That's right.
That parcel of land, that's there forever. You've got ownership of it for, you know, as long as you so choose. It's there.
Yep.
You mentioned Nathan Birch being one of your early mentors.
Yeah, that's right.
Legend himself. But have you had any other mentors or Nathan Birch? You know, what attracted you?
I mean, so Nathan Birch, I was watching him since I was very young. You know, like, I was still a little plumber. You know, going through the
little tiny can.
Yeah, that's right. Lifting buckets of gravel and all that sort of stuff and digging trenches. So I watched him for a long time, and I thought, man, this guy makes it look so easy. He's so motivated and positive all the time. And I got what he meant when I started. Is it's not as daunting and scary after your first one, but he's really good. He's been, seriously, I watch all of his stuff. I mean, quite recently, Jack Henderson, I watch a lot of his stuff. He's very popular. You know, he's got a lot of interesting tactics. And then local guys, actually, when I moved to Cairns, would be Ben Johnson. So Ben Johnson, obviously, we bought our first land off him, and we felt that he was the type of agent that I tried to become when I became a real estate agent. So, you know, he's very open, very honest, and he's not you know, shying away from helping young people with advice and that sort of stuff. So, yeah, no, he's good. He pointed us in the right direction when we moved to Cairns and told us what his sort of forecast was for the area, and we trusted it. And look, mate, it actually paid off, quite well. So,
I think for me on that front as well, and I'm sure you have had this same experience. so many people are open to sharing their knowledge. Like if you're genuinely interested and genuinely like wanting to have a crack, these people will stop and like spend the time, teach you their ways, let them know their wins, their failures, everything else. And I think that's so crucial, especially for anyone starting out or maybe they've got their first investment property. You don't have to go through this journey alone. Like look around, see who you can find that's walking the path and see if they can help.
Correct. And one thing actually that I took away with everything I've done, like even from very early plumbing days, starting my first plumbing company and that sort of stuff, is Nathan Birch actually said a line a long time ago, if you do what they've done, you'll get what they've got. So I always try and focus on taking advice from people that are where I want to be. And as you proceed to, you'll realise that there's a lot of people that don't want to do that sort of stuff too, like investing and all that sort of stuff. They just want to live their life and do that. So you'll slowly push away from people like that, and your groups you try and focus on being closer to people that have what you want to be, that sort of stuff. So
I think that like tall poppy syndrome is just so real in Australia, and it's such a dangerous game too. Like people that just get almost emotional when you start like succeeding and like having what they don't have, the reverse of what you've just said. They just want to like drag you back down to your level. And I think that's, a really important thing is to make sure you find your tribe, find those people that can support you, find those people that can keep you growing in the right direction. Correct. Otherwise, you're just going to get stuck.
And even like now, like we have a good circle of friends and all that sort of stuff, and not everyone wants to invest in that sort of stuff. But if they're not negative and if they're positive to what you're doing, it's the same. Like a lot of people we know, they're investing. A lot of people aren't. As long as they're good people, they're good to us, we're good to them.
You're saying you built your first property 2019?
Yep, that's right. Yep.
The market's obviously changed a lot in Cairns since 2019. What are we, 6 years on, which isn't that long. Like 6 years isn't a huge time frame, but we've seen property prices double.
Yep, that's right.
Across Australia, the market's gone up tremendously since 2019. Do you think it's too late for someone to start today?
Look, I always say the best time to buy is now. It's like a lotto ticket. Like no one knows what's going to happen in the future. You either take the risks or you don't. I've seen, for example, one young buyer who's waited 4 years to buy a property. He came to an open home the other week with me. His parents are still saying, "Oh, the roof screws need doing. Don't buy this one. Don't do that one." That's $4,000 to do a whole big roof. Whereas, the property prices since he was looking, like for example, Smithfield Village. 440 used to be able to buy a house and build a house on land, including the land. And now they're selling it, $880, $890 in the same suburb. So they've literally doubled. So the sake of the roof screws and that sort of stuff, if he'd just gone for it, it wouldn't have, he would have made all that money.
The flashbacks I have to when I was selling real estate and like the amount of bathrooms with moisture in them. The building inspector, the bathroom's got high moisture.
That's right. Yep.
They're talking like a $500 problem.
Correct.
That now has cost them $500,000 because they didn't buy.
That's right. Well, that's actually a prime example of the one in Stanton Road, our first one in Stanton Road. So it was up for around $500,000. No one wanted to touch it because it was a deceased estate that had a lot of problems. It wasn't like anyone had passed in the home, but the house itself needed a lot of work. No one wanted to touch it. We came along. I think we offered $447,000. And I was happy with no building inspection or anything like that. We took it on just because of the land.
Yep.
It rents out well. It's nearly positively geared. And we've got a great site that's for future development. So we were always happy to take a risk. And I think it's actually good. A lot of people that have a trade have a bit of a head start on others 100%. As well. Because if you can understand a property and know how much things cost to fix and that, and it's not, outweighing the growth of the property, then I would be buying it. Yeah.
And I guess it's, we spoke earlier about, that daunting process of buying the first or the second.
Yep.
And it's daunting because you don't know.
Correct.
And, if you've never had any plumbing experience, you've never done any tiling and the bathroom's got moisture in it, you're like, does that mean the house is going to fall down?
That's right.
Where once you've seen that once, twice, 3, 4, 5 times, it's like, well, it's very common. It's not a major issue. We'll get it rectified.
That's right. And we have the great benefit in like older parts of Smithfield, which is a really good area that I try and focus on of investing, is all the walls are concrete block. So if there's moisture in the shower, you regrout it, the concrete block's not going to be damaged. It's still rinse fine. It cost you $500 to regrout the shower and it's good as gold, So, I think we have that those solid homes in those older areas are great for investing for that reason, is they can't really be harmed. They're you can't kick holes in walls and that sort of stuff because they're so strong. So,
I completely agree.
Yeah.
So you started buying 2019. You built your first house. What does your portfolio look like today?
Look, we have a mix of land, new houses, older homes. We have a good mix. I think in sort of end of 2024 to end of 2023 to end of 2024, we bought 6 new properties.
In a 12-month period.
In a 12-month period, so we did one every.
That is
8
impressive.
Weeks. It was
one every 8 weeks.
Yeah, which is pretty. That is scary. Like you're seeing
your bank or broker must have just been pulling his hair out trying to keep up.
Yeah, shout out to Jai Hobbs from Evolve Loans actually, and Serena and Maggie there. They definitely I've put them through the ring of those guys, and they've supported me every step of the way. So couldn't recommend them enough. Yeah.
Did you ever have more than one under contract at once?
I did, I believe. Yeah. So I'd just come out of a purchase contract, and literally as that was finishing, I'd signed another one, which was pretty scary. The most scary part is seeing the big negative in front of the number in your bank, but then you've got to remember that the capital gain outweighs it in the end. So But
we had an experience where we bought a house and basically half of a quadplex.
Yep.
And we were trying to finance basically both under contract at the same time. And trying to get, the broker was absolutely fantastic, but just trying to get the banks to understand what the end state of that looked like. Mm-hmm. It just was so far out of their norm that they you could just literally see the computer twitching at the idea of multiple properties being under contract at once.
Yeah.
It's just funny sort of reminiscing on that, I guess.
And it's uncommon too. Like a lot of people, they might buy one property in 50 years.
Yeah.
So doing that many in a short span, even 2 in a year, is scary. So
was there something that lit the fire in you that year that you went this is a year I can see where the market's going, or what was it that made you buy 6 in 12 months? Because that's no one does that.
Look,
Let's be honest.
It's so 2 of them were builds. We did a duplex site, so that was 2 of them. One of them just happened to be the right place, right time. It was on for I think 600,000 with an agent. We ended up getting for 5 directly from the owner because the form had expired. The good part of being in real estate is you can just call an owner and say, "Hey mate, the listing's expired."
Hey, even if you're not in real estate, you can call an owner. You can knock on a door. You can introduce yourself.
Yep, it's just it's just people being people. You just have a chat with the owner. Hey, look, this is what I can offer you. No building inspection, no commissions. I'll settle it in 21 days. No finance clause. We just risk our deposit to get the property for a lower price, and we got it for 5, and now it's worth a lot more. They had it up for 6. It's a corner block development site. Just right place, right time. So that was one of them. There was a section of land actually that I'd rung the owner. It was up for sale for a long time. And I said, "Hey, I can actually get you probably 30 grand more for that than you've got it up for market." And then when I went to see it, my partner said, "This would be great to buy." So we actually had to pay.
Way to shoot yourself in the foot, nailed it.
So we had to pay the price that we obviously appraised it at, because I honestly thought it was worth so much more. And then I realised that it was actually worth
even more again.
Because if someone did a duplex, we could, secure it and do a great investment. So I kind of stitched myself up there. But that's all right. I'm happy to pay fair price for fair property, and we've done well out of that property. So that was a bit of a curveball.
That reminds me of just my wife. Hey, hold on, don't sell this to someone else. We should be buying this.
This is really good. Shit. There's definitely some learning curves involved in real estate and investing. That's for sure.
Classic.
For sure. Yeah.
And do you have an ideal end state? Is there a moment where you'll go, enough's enough, or is it a journey?
Look, I'd love to say I do, and I tell people I do, but in all honesty, I get bored doing nothing. My dad's the same.
I feel guilty of that.
Yeah, look, he's he's the same as me. I can't sit still. If I'm sitting still, I'm highly extroverted. I've got ADHD, so I love doing stuff, and I don't really like sitting around.
I can't relate to that at all. I don't know what you're talking about.
I don't really have an endpoint. I'll just go until I think my partner says stop. Really, so that's about it. Yeah, I don't have a goal. Mm-hmm.
And So we're 8 properties in at this point?
Currently, at the moment, we've got 8. So we've done 11 since we've lived in Cairns, but we did sell 3 of them.
Nice.
Reluctantly. I probably would have kept all of them if I could go back. But again, learning curves and that sort of stuff, realising that you could borrow 100% with the equity and that sort of thing, that was learned along the way. So.
And from those 11 properties,
Yep.
what do you think would be what's the best learnings you had? If there was like one thing that you'd have to go, when this happened, that changed everything.
Look, I mean, learning curves, I've had a couple. My biggest learning curve was I bought something in Edmonton. I spoke with Ben Johnson, he had a lot of land going on. He said, mate, this place is excellent. So we thought, okay, we're going to buy a block of land out there. We bought a corner block, 1,000 metres. We paid like nothing for it. From this day and age, it was nearly nothing. And I think it was like 210 grand.
1,000 square metres,
yeah. Now you're looking at 4. So here's part of the story is I thought, why am I buying in Mount Peter, the back of Edmonton? Why am I buying there when I work and live in the beaches? It's going to be a long way for work. So we thought, we'll just sell it and, we won't do anything with it. Bad idea, because a year and a half later, those blocks are now going at 400 to 420 grand. We made 30 or so on it, and if I could go back, I would have just sat on the land and just serviced the debt of it and just left it. But that was probably one of my biggest learning curves. Is didn't matter where in Cairns you were, it's going to go up. So, but that would be my biggest, I reckon.
Makes sense, and it's hard, like. Speaking about like earlier about like circles of influence and that, there's so many like inputs and so much noise in the world and like hearing different things of different people, and it's hard to like siphon what the actual truth is. Yeah. And like Mount Peter's story is like a really good one because like there is a lot of land down there. There's a lot of supply.
Correct.
There's a lot of property that's still going to be cut up into the future. So like I would have been of the same opinion that like maybe you're better off putting that cash to work elsewhere.
Yep.
But doubles in value in a couple of years.
Well, that's right. So, I think because for me, I focus on areas that have a small amount of space to grow. Supply and demand, once it's all gone, it's gone. That's right. Mount Peter, I thought, how much can this really go up? There's thousands of acres out there they're going to chop up in the near future. I think Cairns Council just said they're pushing 18,000 houses out there now. So, but no, regardless, it's still completely boomed. So, I don't think one experience is always the right one. I think that it's very vast. Like, supply and demand is only a small portion of it. So
makes sense. I was chatting to you the other day, and you mentioned you've bought up the Tablelands.
Yes, Youngborough.
It's interesting. It's a market that's been on my radar. It's where my parents-in-law are living up there. Yep. It's beautiful. It's such a stunning area, and it's an area that I think flies under the radar so much. Yep. What drew you to up there? Was it a lifestyle thing or?
Look, we were going up to the lake a little bit, with a bunch of friends, that sort of stuff. We thought, we're always up here. We'll have a look at the estates up here. So I had a bit of a look and I thought, okay, I've seen something similar in New Zealand where I'm from. There's not much land here by the Youngborough waterfront. How much will this go up over the next 10 years? And I thought, okay, I'll have a look into it. I rang the developer. And then I only ended up buying a year later actually from up there, but it'd gone up 100 grand by that time. And I thought, okay, I've got to get it now. I spoke to a friend, we were going to buy a block together. Ended up actually 4 friends, we bought 4 blocks in a row, one each, because we all thought, okay, this is going to go up well. Yep. It had more growth than where we were investing in Smithfield in 12 months than Smithfield did in 3 years. I think we bought for maybe 220, 230, and now the blocks are 410. We only bought November last year. So the growth, again, I focused on somewhere with limited land space. Once it's gone, it's gone. And then the other thing that drove me to buy up there is because of selling real estate, there's a lot of people from Melbourne, Brisbane, Sydney, who are selling $2-3 million homes and moving to Cairns with lots of money left over. Now, I see Youngborough and Tinnaburra, as being a bit of a playground for people that have extra money with boats and jet skis and that. So that's another factor that drew me to buy there, because I thought someone's going to buy up here for having a lake house. They're going to have money left over. They want somewhere to go and play on the weekend, and that's great. I'll buy here and it'll go up. So
I think what I gravitate from that, and I think the real key learning there is drawing those similarities from spots you've seen in New Zealand. You've seen it perform in New Zealand. You've seen other areas where land's constrained, where people want to be on the beachfront or on the lakefront or as close as possible. And then you've got this pocket that's not that popular just yet, but it has all these attributes that are exactly the same.
Yep.
And when like an apple looks like an apple, all the apples eventually start to like.
That's right. And speaking to Dean up there, the developer, you know, he's got a lot going on up there. He's got the Youngaborough Village, Youngaborough Acreage, the waterfront estate. So all of these areas are seeing similar growth too, but the waterfront itself, right on the lake, because it's so limited and because people want to be as close as they can to that boat ramp, it just excelled far beyond everything else. So I just saw that as the opportunity to
smart
buy.
Play, very smart play.
Yeah, so it worked out well. But again, it's a risk. You know, I could have bought and nothing could have happened. But now blocks are selling up there like hotcakes, and as soon as they're released, Dean's got them gone. So yeah.
You say it's a risk, and like it's always a risk. You know, we're putting money down, and you're putting large sums of money down.
Yep.
There's always an element of risk, but the beautiful thing with like property, and you know, we just touched on it before, and you can look at like similar locations performing similar over time. It's performed bloody well over the last since man was living in his cave, defending his cave. 100%. Properties have performed pretty well.
Yeah.
I think like you look at the economy, and like there's so many tradies that are like their jobs are tied to property. You look at the ASX 200, and there's so many banks and different companies tied into property that it is a risk, but geez, it's a good calculated punt.
Well, 90% of millionaires are made through real estate. So, I mean, you can't really go too wrong. And as long as you're looking at areas and you know, researching what things have sold for, like when I look at a house on a street, I look at the whole street, what's the highest sale price, what am I paying, and what's driving it to go up more. I think a lot of people, they sort of, they see a house as their first home especially, and this is something maybe a little bit off topic, but when they see their first home, they're wanting to buy their dream home, and it's got to be completely finished, and it's got to be in a prime location. And me, I didn't do that. I had no attachment to my first home. All I wanted to be was on that ladder. And I think a lot of people buy these dream homes to start with, and they overcapitalise, and there's no room for improvement on them to increase that value to get that second home.
Yep.
And my goal was always that my first home was a stepping stone. A lot of people, I think, needs to change that sort of opinion that their first home is going to be a stepping stone rather than the forever. So,
and as prices push up, like the reality is people are going to be forced to realise that their first home is going to be a stepping stone, whether it's to that ideal family home or into an investment.
Yep.
That first property being the property that, you know, maybe your mum and dad home that's that aspirational home becomes less and less likely as a first home buyer. It's just not obtainable. And that's, you know, I think where it's so important to, you know, we touched on it earlier, just like getting into the market and understanding how the game works. Even if you're just buying your first home, getting into the market of your first home and going through that process and then seeing that big negative balance on your bank account, that just sets everything up and builds that momentum.
Yep.
And I think another thing that's so important here as well, it's bloody hard to save $100,000.
Oh, it's crazy. Like, you know, I had a good example would be, I had a young lady who's wanting to sell her property now and then buy again next year another property. And I said to her, look, I mean, that's cool, but what are you going to make more on? Are you going to save more between selling that property and buying next year? Or is your property going to go up more between now and next year? So saving money is very difficult with the amount of costs these days. Like, you look at the average rent now in Cairns from when, you know, a few years ago, it's crazy. It's hard to save.
Even if you're on like exceptional money and can put $500 aside, it's still going to take 4 years to save $100,000.
Oh yeah.
And that's like, no one's saving $500. Like, you have to be on really good money and extremely disciplined to park $500 every week into a savings account.
Correct.
Where, you know, you've told many stories just now of like properties going up 200 grand in a number of years, and they're not unique stories. Like, we've seen it across Australia and across so many markets and so many properties, and we've heard the stories so many times of investors buying in for 5, 6, 7, 800,000.
Yep.
Fast forward a year and those properties are up 100, 200,000.
That's right. And again, like, a lot of people shy away because they'll look at an investment property, a second home, say for example, it's got tenants in it. Oh, but that's going to cost me $100 a week to keep it. But you think about it, what's going to be more beneficial to you is paying that $100 a week for 52 weeks and making $100 grand, or not having that property Are you going to save 100 grand? Absolutely not. So it's
all-
better sometimes just to get in and pay that extra.
And you're talking like a $100 a week, talking a $5,000 loss per year, which you then get the tax deductions on that.
Correct.
Versus, a potential 50, 100, 60, whatever that looks like gain. And
That's right. That's right.
The maths makes sense real quick.
Yeah, 100%. I think, I think a lot of people as well, they go out and I think younger people especially have this big thing about having to have the nice car and everything, like the Gucci, the Prada, all that sort of stuff. I don't have any designer stuff. I don't have Prada or Gucci or any of that.
Mate, you should see my car that's parked out the front.
Yeah.
True story. My daughter absolutely hates it.
Oh, really?
And like most days I drop the girls to school in mum's car.
Yep.
And not that it's anything flashy, but it is relatively new.
Yep.
My car, like I say, the girls hate it. But like, I'm still going through that journey. I'd still rather put that cash into assets that either I can grow from and make money from, or at least have a whole lot of fun with.
Correct. And I advise a lot of young people that I speak to at properties and that stay away from big car loans because it locks you out of buying other properties or buying a property in general. Credit card debt, afterpay. Like I personally, I don't have any car loans. I've never had a car loan, and I'll only buy a car that I can afford. We sold a property. We had some excess funds. We bought my ute so that we could then renovate properties and put everything in the back of the ute, carry things. So we invest in stuff that's going to give back to us. I think there's so much debt out there that's very easy to get for young people now. Like, I want that trip here. I want that trip there. I'll just afterpay it $3,000 or $4,000. They don't realise that $3,000 or $4,000 is going to cost them $7,000 to then pay back. So I think debt is very easy to get into, and people sort of maybe should focus on stuff that's going to benefit them and add, buy assets, not liabilities. Yeah.
And I think it's that debt that like just freaks people out. They've had that $30,000 car loan, and that $30,000 car loan costs them $60,000-$70,000 to pay off.
Correct.
And they just can't fathom getting into $1 million worth of debt. They just think that the two are the same, where they couldn't be more worlds apart.
That's right. Like I see a lot of young tradies, especially, and coming from a trade background. I bought a crappy old van, a high ace van, where there's all my mates that were tradies were going out and getting $60,000 loans for Hiluxes and this and that. As soon as they drive off the lot, they lose a third of their value or something like that. You won't get it back. So
makes a lot of sense.
Yeah.
Now, tell me, if you're talking to 18-year-old little Ken Turner, were you back in New Zealand?
I was, 18,
18 in New Zealand.
Yep.
What would be the one piece of advice that you would just like beat into him to the to the point that he understood it?
I would say, obviously. That's actually a really tough question. I did think about, sort of the other day, what would I do if I could go back? And I was thinking, would I do the same things, do this, that? I wouldn't change a whole lot because I've learned a lot from my experiences. But I would say that, I'm big on supporting a lot of people. I'm big on supporting my big groups of friends, and I'm big on supporting anyone that looks like they want to try and do well. And I've supported a lot of people in the past that have ended up burning us. Whether it's tradies or this or that, I would say stick with people that support you, stick with people that do a good job, and just trust your gut. Really, I guess there's not a whole lot I'd change if I would go back though. To be honest,
that's a good thing. I think a life without regrets is pretty much a life well lived, isn't it?
Oh, yeah, because again, if I hadn't made the mistakes that I made to get here, I wouldn't know half the stuff I know. I don't know. That is a very tough question, actually. Maybe we'll circle back to that. I'm still not 100% on that. Yeah.
I think that's important, though. It is those failures, and I think I really love the saying "fail fast." Mm-hmm. If you're going to do something shit, do it shit fast, so that you learn how to get good at it.
Yeah.
And it's very easy to get stuck in repetition. You see a lot of people live the same year 80 times.
Yep.
Where I think, failing fast, being okay with the fact that something might not work out, just allows you to put in the reps. And when you put in the reps, you start to improve.
Yep.
You start to do things differently. You start to do things better.
Yep.
And I think that's just such a big unlock.
Correct. Actually, I tell you what, if I could go back and tell my young 18-year-old self something, it would be you can't help everyone. I've put a lot of trust and faith into people that have turned out not wanting to do, well or anything like that, or they're happy just to make a quick dollar and ruin relationships for that. Whereas I'm quite big on keeping my relationships, repeat business, that sort of stuff. My reviews are very important to me. And if it means making a little less money but getting a 5-star review, I'll do it. That would probably be what I would say if I could go back.
Mate, it's been an absolute pleasure having you on.
Yeah, no stress.
Certainly some interesting tales of the past. And it's always good to talk to someone that hasn't just talked the talk. There's a lot of people out there that talk a big game but haven't actually gone through and lived the lived experiences that you have. So it's always interesting to have someone that can come on that can talk just from, they haven't listened to it on a story or a podcast or whatever. They've actually gone through and walked the miles. So absolute pleasure having you on.
No, it's been good, mate. It's been good. Thank you. Thank you for your time. Appreciate it. Yeah.